Share markets around the globe are marking time ahead of this week's big market event, which of course is the interest rate decision due from the US Federal Reserve tonight our time. In fact, that'll be delivered at 4 a.m. Thursday morning for those on the east coast of Australia. And that widely expected reduction in interest rates has already been priced into markets, and we now wait for the commentary and the statement that will come with this interest rate decision as investors assess the chances of further rate cuts. At this stage, the market is firmly convinced there will be rate cuts, pricing another 2 rate cuts before the end of the year in the US, and major investment banks calling for further cuts next year. So any rhetoric that reinforces that could support the share market rises, and any rhetoric that goes against that could see a corrective move in share markets in trading tonight in the US. So something to watch out for. Ahead of that big event, we really saw very cautious trading all around the globe. The Hang Seng marked time, European markets were basically flat, and US indices very much the same, all within a whisker of flat for the session. And it's pretty clear this macro event is the key to market performance in the short term. And ahead of that, we just didn't see much action. Volumes dropped right away. Similar situation to what we saw in Australia yesterday, with a very weak start to the trading week in terms of volumes being exchanged. That full focus on the Fed meant that a lot of the sectors were traded as to their interest rate sensitivity. So we saw support broadly for banks and interest rate sensitive infrastructure and real estate stocks, but nothing to get carried away about. It's clear that the markets have been looking for this action for a long time and have already positioned ahead of it. So not expecting a huge day in trading today. A couple of developments, however, overnight. US oil stocks did rally as Russian assets were attacked near the Ukraine. The potential there for further geopolitical disruption coming out of the conflict with Russia could mean that we see a firmer tone to oil markets. It's widely expected that production coming online would see oil drop below $50 a barrel at some stage next year. That narrative is now being questioned, particularly with the potential for further conflict and an escalation potentially in Ukraine. So good support for oil stocks generally. There was also a call last night to block the Warner Brothers takeover. Both the shares in Paramount and Warner Brothers fell by about 6% on the news. It just goes to show how volatile mergers and acquisitions can be. There's potentially more to play out in that story. But with uranium stocks in focus, they led the ASX gains yesterday. It does appear that more conventional forms of energy are coming back into focus. The dreams of many for technological breakthroughs that would take us into a decarbonised energy era are yet to be realised. Green hydrogen appears to be a bust, and a lot of the push to decarbonise industrial processes around production of steel and aluminium, for example, have simply not delivered. And so we're seeing a shift back towards the more traditional energy sources, oil, gas, and uranium. And uranium really catching attention now. There has been pressure on that sector. We are coming from lower levels, but yesterday we saw Boss Energy, Lotus Resources, Aura Energy, all up 8%, as I say, coming from lower levels. But nonetheless, that's quite an extraordinary move, because we also heard yesterday Paladin Energy was taking advantage of recent lift in its share price to raise $300 million. Now, that would normally see a sell down in the sector as professional investors made way for the new issue of shares, and yet we saw exactly the opposite going on. It does suggest there's real sensitivity, and coming from those lower levels, there might be further upside potential in local uranium stocks. The US has made moves to boost its uranium stockpiles, and that is tightening the uranium market generally. The IAEA has said that nuclear capacity will likely double by 2050, and there's a call made to move away from Russian uranium, and given the energy security issues surrounding Russia at the moment, that seems a reasonable call. Deep Yellow jumped 9%. It's now up 85% year to date. There are a number of analysts who have put a buy rating on the stock, and the Namibia mining appears to be going well. The rally in the past 4 weeks has taken it back to more than 10-year highs, and we've got a clear uptrend in place in deep yellow shares. We're seeing a similar situation with the Global X Uranium ETF, code URA. It fell 3.5% overnight, but that might reflect its recent popularity. The sector also rallied. There is some concerns that it's run a little ahead of itself, but nonetheless, once again, very clear positive momentum. It's the world's biggest ETF in uranium, and it's also at a better than 10-year high after the rallies we've seen. In the US, a bit of a focus on refiner Valero Energy. It terms itself as a fuel producer. It's near all-time highs with a $50 billion market cap. Yesterday, it rose by 3%. It's up 36% year to date. And once again, there are analysts out there with buys and even strong buys with current share price around $160 a share. We're hearing of targets over $200 a share. So traditional energy back in focus. Deep yellow, Global X Uranium ETF and Valero Energy, 3 to keep in mind to play that theme.